You signed for $50,000, but this year only $37,000 will land in your bank account. $13,000 vanishes before you touch it, not to one place, to 5 different organizations. And there is a 6th that collects before any number even appears on your payslip. Right here on How Things Count, we follow that salary from the moment your employer calculates it to the moment what remains finally lands in your account. Start with Payday Morning. Before your employer transfers anything, payroll software runs. It takes your gross salary and begins slicing. The first and largest cut goes to the tax authority. In the UK, that is HMRC. In the US, the IRS. In Ireland, revenue. The mechanism is the same everywhere. Your employer calculates how much income tax you owe. It uses your earnings, your tax code, and your allowances to find the number. Then it sends that money directly to the government. You never touch it. For someone earning £50,000 in the UK, income tax takes about $7,500. 1/5 of everything above your tax-free allowance, gone before the money moves an inch toward your bank. But income tax is not the only organization in line. Next comes social insurance. It has a different name in every country, but it does the same thing. In the US, it is called FICA, Social Security plus Medicare. In the UK, National Insurance. In Ireland, PRSI. This is a separate charge on top of income tax. It funds your state pension, unemployment benefits, and public health care. At £50,000 in the UK, your national insurance costs roughly $3,000 a year. Now 2 organizations have been paid. Your salary has already shrunk by more than $10,000, and there may be more. A universal social charge, a health levy, even a student loan repayment clawing back its share. Each one answers to a different government authority. All of these deductions appear neatly on your payslip. You can see the numbers, you can trace every penny. But there is a second bill your employer pays that never appears on your payslip at all, and it is bigger than you think. Your employer does not just pay your salary. They pay taxes on your salary. In the UK, employer national insurance adds 15% on top of every pound you earn above a low threshold. For a £50,000 salary, that means an extra $6,000 to the government just for employing you. The US and Ireland have their own versions. American employers match your Social Security and Medicare at 7.65%, and Irish employers pay PRSI at up to 11% of your salary. None of this appears on your payslip. None of it comes out of your agreed salary. But it is real money leaving your employer because of you. Put simply, your employer pays a tax just for the privilege of employing you. The true cost of your £50,000 salary is not $50,000. It is closer to $57,000. Think of it like a restaurant bill. You see the menu price. That is your gross salary. The service charge is your income tax and employee social insurance. But the restaurant also pays VAT to the government on that meal. You never see it on the receipt. Your salary works the same way. There's a tax the business pays that stays completely invisible to you. Now add your pension. In the UK, auto-enrollment means 5% leaves your salary for a pension fund. Your employer adds another 3% on top. In the US, a typical 401k match works similarly. Your pension is not a government tax. It is money set aside for decades invested on your behalf. But it still disappears from your paycheck today. You will not see it again until you retire. Now combine everything. On a £50,000 UK salary, the employer spends around $58,500. You take home roughly $34,000. That is a gap of over £24,000. 42% of the total cost of employing you goes somewhere other than your bank account. So where does all this money physically end up? In the UK, your employer sends a digital report to HMRC every single payday. It tells the government exactly what you earned and exactly what was deducted, down to the penny. Then the employer transfers the combined tax and national insurance to HMRC by the 22nd of the following month. One lump payment covering every employee in the company. The US runs a similar system on a weekly or bi-weekly cycle. Ireland does it instantly. The moment payroll processes, your agreed salary passes through all of these government channels before whatever remains finally reaches you. Next time you open your payslip, look at the net number. It is not just your salary minus deductions. It is the leftover after 5 or 6 organizations have already been paid. Some you can see, one you cannot. The number on your contract was never the real number. Not for you, and not for your employer either. If that changes how you see your next payday, subscribe to How Things Count for more of the invisible systems behind everyday money.